Hello, today me, Derika Isakova, will present you the latest Forex news on InstaForex TV. For the last few weeks, the directors of the US Federal Reserve System sounded different opinions concerning the interest rates prospects. Some of them seem to be ready to start raising the near-zero interest rate on federal funds, while others suppose that long time would pass by before the FRS takes actions. These comments were announced amid strong aspiration of the FRS Open Market Committee to hold the rates low during a long-term period. The president of Philadelphia Federal Reserve System, Charles Plusser, is one of the supporters of the FRS active actions. Presenting his speech on Tuesday in Rochester, he noticed that the FRS has to move in advance. That means that the central bank has to push up the interest rates before the inflation becomes a real problem. In Plusser's opinion, the interest rates correction on federal funds must be related to the situation in the financial markets. In the middle of November, the chairman of Richmond Federal Reserve System, Jeffrey Lacker, reported that although the FRS should remember about risks of too early rates increase, able to damage the beginning recovery, at the same time it should afraid of tighten the policy amid unstable economic rise, as it is necessary for limiting the price pressure. This support of tight policy is opposed by the FRS chiefs who think that the key interest rate will remain unchanged for a long time. Several weeks ago, the head of St. Louis Federal Reserve Bank, James Bullard, made a suggestion that looking at the FRS actions, the interest rate is not going to be changed till 2012. In the recent interview for Wall Street Journal, the chairman of Chicago Reserve System, Charles Evans, pointed out that low inflation and weak labor market increase will make the FRS not to adjust the rate policy till the end of 2010. Besides, a lot of economists of the private sector have the same point of view. There are many arguments against the tightening adherence. The unemployment rate in the USA has touched its maximum level for the century's quarter, and if the economy does not provide workplaces, then it is no need to worry about the inflation, which is fixed by making the monetary policy more severe. The fears regarding that the FRS balance would boost the inflation were untimely, taking into account the central bank ability to manage the commercial bank's reserves and also that fact that bank lending conditions are still rather tough, despite the financial system revival. What is more, any debates concerning the monetary policy put a special emphasis on the interest rates, forgetting about more essential question: what the reserve system is going to do with the assets purchase, which has become one of its key policy instruments. As said by the FRS representatives, finishing the purchase of mortgage-backed assets appears to be the main but not simple task. The central bank is even ready to reduce the purchase, which is to come as the right way of removing the assets from its balance. For a while, the most active steps will be directed to the balance of the Federal Reserve System, so only after this process is initiated, the central bank directors will correct the rates. It was Forex News provided to you by InstaForex News team. Thank you for watching us and goodbye.